It's that time of year again, when everyone speculates about the stock market's performance or impending crash for the coming year. Some well-known doomsday prophets claim that the economy and financial markets are all about to collapse. The Federal Reserve's rate increases and the government's mounting debt, according to the bears, will be the main causes of the crisis. The Federal Reserve has increased interest rates by 3.75 percentage points since March, and is predicted to increase them by at least 1.25 percentage points more. In the meantime, the total gross federal government debt is over $31 trillion, or 124% of GDP, or total economic output. Robert Kiyosaki, co-author of the best-selling book Rich Dad Poor Dad, has particularly pessimistic outlooks. Robert T. Kiyosaki is a businessman, investor, and best-selling author from the United States. Rich Dad Poor Dad is one of his best-selling books and a fantastic learning resource for achieving financial independence. In his book, Kiyosaki is renowned for disclosing information about money and finances, things that are not taught too well in schools. The well-known investor claims that the biggest crash has been brewing since the 90s. However, instead of addressing the issues at its root, the FED decided to expand the nation's monetary supply, which has had a detrimental effect on the value of the national currency. According to Kiyosaki, financial knowledge is the only ultimate asset that investors can gain from a massive crash. The profitability of most digital assets is at an all-time low, which indicates that the majority of the market is experiencing severe losses, according to various on-chain investors. In a recent interview, Kiyosaki offered suggestions for investors that he believes people should make before the biggest crash in world history. Since ancient times, gold and silver have played a key role to investors in protecting their wealth. However, this time Kiyosaki is picking one over the other due to something called the gold to silver ratio, which is just the quantity of silver ounces needed to purchase 1 ounce of gold. FYI, gold to silver ratio, oldest tracked rate in history. For 20th century, the gold-silver ratio was 47 to 1. 47 ounces of silver means 1 ounce of gold. Today, it's 85 to 1, he wrote in a tweet in July. As regards to gold, he claimed, "You profit only when you buy, not when you sell." All these gold people are saying, well, the price of gold hasn't gone up. And I say, what are you waiting for? I remember when gold in 2000 was $300 an ounce. You can't wait for it to go to $3,000 or $30,000 an ounce before you buy. That's what stupid people do. They buy at the top of the market. They all jump in like idiots. I'm waiting for the next crash. Same with real estate. Real estate is crashing right now. I get very excited about it. Everything's on sale. I don't want to pay retail. I just want to pay wholesale. It's common capitalism. To be sure, Kiyosaki does not claim that silver is unaffected by the current market turmoil. However, one asset's strength is well known at the moment, and that is oil. Middle class wiped out by higher oil inflation, Kiyosaki recently tweeted. Of course, if you have investments with exposure to the energy sector, your portfolio will likely look better in 2022 than those who do not. The price of crude oil has fallen in recent months, but it is still up 14% year to date. Strong oil prices are advantageous for oil producers, as you might expect. Investors have reaped massive returns so far this year, especially with companies like ConocoPhillips with 50%, ExxonMobil at 50%, and Chevron at 32%. Kiyosaki advises against investing in anything that can be printed, like a stock certificate, a bond, or a dollar. In addition to advising people not to save money, he goes into great detail to explain the actions of the Federal Reserve and to discuss the grave dangers facing the world economy. He claims that they will attempt to have him arrested for what he said. In June, he also gave some unusual advice to those trying to beat inflation, advising them to stockpile trash bags, toilet paper, and canned foods like tuna and baked beans to avoid price increases. It's crucial to keep in mind that market recessions and full-blown crashes are ultimately inevitable, even though nobody has a crystal ball who can predict when exactly it's going to happen. Being an investor involves dealing with the highs and lows of the market, and in general, you should welcome risk, but also be ready for a downturn both mentally and financially. If you found this video helpful, let a friend know about it, and subscribe if you want to see more videos talking about investing, businesses, money management, wealth creation, passive income, and other financial topics. We'll see you next time.